The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this 30th of March. What an interesting market. You can see the charts right in front here. Yesterday's Fed meeting, a Fed discussion, actually wasn't even a meeting, essentially did something. Thank goodness it was yesterday, because in looking at the monthly chart, it was really important to get out of the way anything that could influence the monthly chart. And that big spike up was really important. And the follow through today is very important, getting closer. We went right to the 17,750 level, which was the left side December high in the Dow. We've gone above that. So a lot of things are happening here that are very key to what we'll be looking at in April and how we can position ourselves. Fed has said we would like some inflation. In fact, what will happen if inflation really comes about? Actually, you have to say, excuse me, Janet, when last were you in the supermarket? When last did you buy anything? Now, of course, I've spoken about competition being one of the aspects that has kept us down in this deflationary mode, because you've got choices. That's the biggest thing, is that you've got choices. When those choices disappear, that's when prices really skyrocket. So this is still just the beginning. This is the tip of the iceberg beginning to form right now, where the Fed is saying, we want some inflation. We're prepared to let areas like yields start to rise. We want to see that. We want to see gold. We want to see the commodities move up. We want to see things going so that we can tell that there's not going to be this deflationary aspect, which we fear dreadfully. So as we're looking at this, let's just do the numbers. Hey, great shows today. Thank you, all of our hosts. Today being Wednesday, straight off me, you've got your swimming lesson. You've got, you've got swimming lesson. You've got Steve Rhodes. You've got Dave White. You've got Tom O'Brien back again. Whoa, full house. And then at 6 o'clock, let me show you right here. What an opportune time to be doing this. When the Fed did that yesterday, I thought, oh, man, what are they trying to do here? I'm busy writing this very big kind of report for the webinar, and now I've got to look at it. And then all of a sudden I say, wait a minute, this is exactly what I wanted. I wanted to see, even though we were actually short, so we had to quickly put in the stops, etc. But the fact is, this is the kind of action that you want prior to something like a webinar that's closing the month out. Why? Because if I give the webinar and it has certain levels, and then out of the blue, the Fed comes in with something that really spikes the Dow 200 and the S&P up 30, 40 points, in a sense, what it can do is it could change the patterns, because we're technical analysts. And if certain levels are taken out, you have to rethink. This way, they've already done it. Now it's not clear as anything, but it's way, way clearer that I can at least now talk about the market in terms of levels that could almost be concluded by tomorrow at 4 o'clock. But at least it's telling us on the upside what we can look for, and it's giving us a sense of what to look for as support levels on the downside. Also, what it's doing is it's telling us what areas we could go to, what areas could be good. And I've got a couple that I think are going to be potentially very significant. And I'll talk about that tonight. I thought we might even still have the trades on today that might get triggered. We'll see. There's no real rush. These are longer term. So it's the coming 3-month outlook in the market, in which sectors sectors could rally or fail. I'm also going to be talking just everywhere. I'm going through skyscrapers. I'm going through real estate. I'm going through the dollar. I'm going to go through bonds. I'm going through yields. Bring food to the webinar tonight. It's going to be a long webinar, an hour and a half, 6 o'clock till 7:30. And I do want to take your calls. Had a couple of questions that I will answer that have been sent to me now. I like that idea. Most importantly, the timing of this is significant because we're going to have a look at charts to see whether the commodities have started a very significant rally or whether or not the commodities have to, in fact, retrace further, and then we'll see. So this is going to be very important. Okay, let's go to the numbers. The Dow, let me move this away here, get this away. Okay, gone. The Dow is up 140 at 17,774. The S&P is up 15 at 2,070. The comp index is up 37. So they're all up 0.8 to 0.7%. Very nice. The VIX index is down 4.7 at 13.17. And I'm going to talk about the VIX. I'm going to give you the levels. And all I can say is in the low teens, it's buying pressure. Just keep it as simple as you can. The E-mini is up at 1475. This is a G/C, which means that we should technically get another move to the upside. Talk about that tonight. The 120-minute chart right now is in leg C, so it should still go to a D. There's a rising wedge formation. It says that about the high so far today, excuse me, the high today is 2064.50, and I'm suspecting that we're going to get somewhere into the 2066 area. That's going to be quite key, just on the very short term. All right, let's look at gold. Maybe let me do this. We'll make it very thorough. Let's go to the Qs. The Qs right now broke out. This is a leg D, an alternate wave count. Went to D. Let me move that up. D right there. And in the weekly chart, it's leg A, still single leg A, gone over 50, almost 60% from the low of the high of 115s to the low of 95s. We're at 109 right now. Very nice. Move up now. I can move the 120-minute chart away. Move it away right there. Get it out the way. And look at the way that the Qs have acted with this candle above the 9-period exponential moving average. Let me open this out a little bit so that you can really see it. That is really nice action. We are so close to an all-time, not an all-time high, but at least a recovery high to the December 115.75 level. And way off the low of 94.84 made in February. So far, this is good action. Let's just do the IWM right now, then we'll do the New York Stock Exchange. IWM, alternate wave count. I've got it, I'm calling it an E just for now. Kind of matches up with a lot of what I'm looking at. Let's go to the NYA.X. That's the New York Stock Exchange. Now, that's alternate wave count. I'm calling this leg C. G/C, I'm calling it C, and tonight I'm going to explain why. And this has broken its downtrend resistance in leg C. This is very significant, but it's only significant in the fact that it says I'm now free to look a little bit more to the upside, but this line is also the line in the sand because the 10,056 level is going to be supported, and it's at 10,270 right now. Those on the weekly chart. The monthly chart is still not looking that great. Neither was the IWM. Here we go. Gold. Oh, let me do this as we're breaking. Gold is down 9 at 12.28. Silver is down 12 cents at 15.24. Crude oil is up $1 at 39.37. Bonds are down 1 and 22.30 seconds, and the dollar is down 42 ticks. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Dow's up 121 and S&P's up 13. We're going to go straight to Ben in Tallahassee. Ben, how are you? Oh. Did Ben just, after waiting so long, did Ben just get... Well, I'm going to do this. Oh, I'm sorry, Ben. So Ben wants to look at GDX. GDX is the gold market vectors, gold miners ETF, trading at 20.13. I tell you what I'm going to do. I've got Scott and Safety Harbor holding on. Ben, if you can call back, I'll take you, but I'm just going to go to Scott first. Scott and Safety Harbor, how are you?
Oh, fantastic. I think I hit another little gem, Basil, after the CX and the Alcoa. Now I'm on POT. Got into it at the 1685 yesterday. It's already up almost $1, and want to see what the master says about it.
So we've been looking at it in my...
by the way.
I'm sorry, what?
You're the master, by the way.
Oh, well, thank you. We're always as good as our last call. That's the way it is. When I was a professional musician, we always used to say, yep, you're as good as your last performance.
Well, it's like sports. I mean, a guy can play 20 years in the NFL, and he drops the ball on the 20th year and costs him a game, and that's all anybody remembers.
Correct. So, okay, what we're looking at, folks, is potash core, Saskatchewan. It's obviously in the potash area in agriculture. Now, this is very important. I liked it earlier on. I can't even remember. I think I put it on as something that we would buy. I don't see anything. Yeah, long at 15.59 back on the 29th of January. And I can't remember if we took a little profit or a lot. I know we didn't hold it for more than a day or so. Now, what's really important about this is that it shot up to 19.50 over a period of a month and a half, and it broke the previous left side resistance, and that's important. But it has given back quite a chunk. I think you've got yourself a winner in the sense that we are looking at the commodity index as being in play right now. So this is one that we're talking about, folks. I don't know if any of you remember, but here at TFNN, we were talking about these agricultural type stocks, potash and other minerals.
Yeah, I would deem it more of an agricultural play than a commodity, wouldn't you? Because it really doesn't
Yes.
follow,
Right.
Alcoa or CX. It's more of like, it's fertilizer. So
I said it's agriculture, but in fact, it goes into the category of the whole commodity area in the sense that it had a massive move
the thing
to
I like about it is it
80.54.
seemed to have missed that spike. It didn't ride with the commodities up for the last month. It's just now starting to react. And that's
So
what I
it's
like about
always
it.
a little belated. And if you remember, look, this made its high back in 2008 in June. And if you look at the GLD, it made its high back in September of 2011. So it's always a little bit behind. But what's really important about this is that it's in an area. I looked at this. AGU is another one I looked at, which is Agrium, which has had a much better chart pattern. Oops, let me get out of that. Oh, I used to have that all notated. I'll have to redo that. And that's at a move that's gone from the 80 area to 92. So yes, I think you're in the right area. So now this is what I'm going to say. So you've already taken your profits in this?
I took profits about 10 minutes ago, but of course, I'm thinking about it. Like with CX, sometimes I'm better off just staying. I got in there at the 390, and went hit 729, and I got out at the 590 range. So that's why I'm calling.
Okay.
The master.
So I think you've gotten out perfectly, and I'll explain why. Although the 120 minutes says that there should be another rally, I would like to see how it holds. So folks, potash, POT is the symbol trading at 17.74, up 23 cents. What's really important about this is that it's fascinating. If you're looking at my chart here on the left, it's got the 9-period exponential moving average, this thick black line. I especially made it thick so people could see it. And that line is right at 1782. So you got out perfectly because it's now under that. That's being treated as a resistance. And I'm going to suggest to you that the next time to look at it as a potential bounce would be somewhere in the 1760 to the 1740 area. And if it can get there, and if it holds, and then within an hour and a half, it starts to move higher, you've got yourself another bounce in the stock. So at this particular point, the weekly chart needs a lot of work for me to say, because the pullback that it just had from the 1940s down to the low of a few days ago at 1662 was a little bit deeper than what I'd like to see on a weekly chart that's starting to make improvements. So this says to me maybe the weekly chart is going to have a lot of intra-day or intra-week bounces, and then it's just going to take its time building a base so that at some point it can pierce the high of 19.38. So I like the fact that you got out. I would say to you, you might look back in 3 weeks' time and say, oh my God, I was going in, I was going out, and here it's gone from the 17s to the 20s. But in fact, I think the way you're doing it right now is going to be very good, because it needs to build after that move down from last week into the beginning of this week. It needs to be building some kind of a base of support. So I'd be going in and going out just like you're doing. But you might want to consider that if it comes back to 1720, that you want to just on the side start a little position that you don't actually look at. You put in a stop, maybe at 1680, and you just say, I want to leave this, because if potash and the other agricultural sector plays begin to move higher, you might find that this is one of those that has more of an intermediate term bout of strength that holds all the way through, and then it stalls very strongly when it gets to the 1950 to 2050 area. But in the meantime,
thank you very much, Basil. You're the master, that's for sure. I appreciate it.
Thank you very much for calling, and thank you for the kudos, Scott. I appreciate it. So for Ben, if Ben is listening, I want to do the GDX here. Ben, the GDX trading at 20.03. I remember we spoke about it perhaps being a little bit of a nibble to be able to look at it more as an intermediate term position. I still feel that this is the way to go. We're trying to position, and tonight I'm going to be talking about it. We're trying to position ourselves in this area that we could use more, how can I put it? I call short-term, I call near-term just a few days. I call short-term like a swing trade, 3 to 5 days. It could actually turn out to be 2 weeks or even 3 weeks. But intermediate terms means that I'm going from the weeklies to the monthlies. And once you're in the monthlies, that's really important. Or let's put it this way, from the dailies to the weeklies. Weeklies could be up to 6 weeks. And then more longer term, 6 weeks to a monthly, or it could just be longer term, as we have a couple of plays in our portfolio that are just longer term. We've had them for a long time. So if this is the case, the GDX at 20.02, I'll do this together if you don't mind. I'm going to do it together with the DXY. Sarah asked me, was it Sarah? Yeah, I think Sarah asked me about, is this the dreaded H pattern in the Chapman wave methodology? This is the one that looks like the lowercase h. Let me draw it in here. Looks like this. Then it has an arch and an arch. And there are 3 ways of looking at this. One is if it takes out the left side low and doesn't close below, but it closes above, it says it could rally a certain number of percentage points. Percentages. If it closes below, it says that's very limited to the upside unless you get a buy signal. And if it doesn't even get there, it says you can break above the arch high. So I'll talk about this as soon as we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back. So I just wanted to quickly show the euro because I was asked about this. The euro, I've got an alternate wave count. I'm inclined to almost make this low here on the 10th an aberration so that it really is leg E to the upside. But actually, I have to be strict, and I'm calling this new leg E/B, probably a B. But most importantly, if the euro takes out the high of the 11th of February at 1.13755, you're going to see this dollar go even lower. That's number one. Number two is the weekly chart would go to a leg C, and I've got these M-shaped patterns. You remember the lowercase h can very often go to an M, and I'd drawn this in some time ago. So this is a good chance for it to go to a leg C, start to stall in the area of between 1.17 and 1.7. Monthly chart is starting to improve, and this might be suggesting keep looking at the commodities. I hope to do that tonight. I better make a note here because euro, I'll be doing the dollar, but I usually do everything. So I just need to make a note. Anyway, so that's what we're looking at here. So let's go back to the question of where would the dollar go? And I believe it was within 2 cents of breaking the low. I believe it will break that low. Let me go to the 120-minute chart. 120-minute chart has a left side, right side price time match. Well, this is exactly the H pattern that you want to be looking at. So that's an E right there, E, and then it goes to an F. Okay, so that's the F on the 120. It'll be an arrow, an inverted V, and that's the arrow down. Got it. Okay, so now we can look at that as a potential midpoint. So I've got right across from there to there, right to there to peak D. And then I'm going to go to the right side, right here, new parallel. Make it pink with a dash, just to distinguish it from everything else. There we go. See where it comes out to? And it comes out to, in the 120-minute bar, the low of 94.58 made at 23.15 on the 17th of March that's 11:15 at night, is within, God, I don't even remember what I said, 94.59, 94.58. Oh, that's right, within a penny. So it's got until this afternoon, at 3:15 this afternoon, to take that out. If it takes it out and then closes above, it could have a bounce, and that bounce could take the dollar to the 92.35 area, 95.23 area. If in fact it fails and closes below on any of the 120-minute bars, then it says that 95.03, the 9-period moving average, is going to be very strong resistance. My thinking is that we've probably made some kind of a high. I don't know if that 120-minute chart is going to actually go to D in the E-minis. But when I'm looking at this, what I do believe is that the dollar is under pressure. It made that peak B in the monthly, and then a minimal, more minimal you could not get in a monthly chart over a period of 8-9 months or whatever it was, to go from 100.39 all the way down to 92.62, and then come all the way back to 100.51 and then fail. This usually says that this is a kind of a double top you've got to be careful of. When this cup formation breaks halfway, which is done, there's a real good chance on a closing basis, we've still got tomorrow to go, that you're going to test the low of 92.62. My target here on the dollar is to get to that 92 into 93.20 to 92.80 area. That's going to be the target over the next couple of weeks. And it'll be leg D, another 2 cents down, so it's leg D in the weekly chart. I hope that answered your question. Next question was the Dow had its, let me move over. The Dow had its subject. Indo had its biggest, fastest quarterly turnaround since the fourth quarter of 1933. Can you make any forecast for the next quarter on this? I am hoping to be able to give some kind of a forecast, and I'll be doing it tonight. And I'll give the parameters. I'm going to hopefully try to give the trades that would be involved. And my belief is that from yesterday's action into this morning at about just when I started my show, I think I was still doing my webinar for tonight, still adding, subtracting, taking away, adding. The picture is becoming a lot clearer. The actual trading numbers I hope by the end of the day tomorrow, when the month concludes, and then we get Friday and Monday. That's going to be so important for a number of reasons, and I hope to be able to get. But already I've selected particular positions that we want to take. We might get them today, I'm not sure, but we want to be taking certain positions for that 3-month outlook. All right. So that was that question. Another one is so Adam, Transocean rig. Let me just do that right now. RIG. Rig is trading down 7 cents at 881. This is the Eiffel Tower, goes straight up, straight down. You know what? I'm not going to look at rig right now. This is Transocean Limited. If you don't mind, I want to put it into the category of the oil service, etc. I'll look at it again Friday. I want to give it a couple of days because this Eiffel Tower can prove to be extremely bullish or very bearish. It depends on how close it gets to the low. So let's leave it for now, but I'll put it down. I'll turn the page and I'll put down rig. So I'll be looking at it rig. Okay, so let's do this. In the remaining time, we've got a couple of things I want to do. I'm going to go back to the GDX. So the GDX is actually the miners themselves pulling back, down 61 cents at 1994. With the dollar pulling back, gold is down. What did I say? Gold was down. Where is my gold contract? Right there. Move it up. So gold is down about $9. Very interesting. A couple of things are going on. One is we are starting to get closer and closer to extreme resistance in the stock market indices. But if the resistance just above, if that's taken out, then you've got to consider that there's a possible move now going into mid-April that could take us to all-time highs. I'll be talking about those potentials, and I'll talk about the percentage probabilities in each case. But most importantly, what I'm looking at is that the way the gold index and the gold market vectors miner ETF has rallied from just in the 1260 area, 1240 on the low was the week of the 22nd of December of January, straight up, almost a double. That is amazing, to 2142. And now it's only pulled back in 2 weeks. It's only pulled back, not even to the 9-period moving average in the weekly, which is at 1881. I do like what I'm seeing. And because of that, I'm inclined to say that the low that was made back in January, December, in the GDX, that has to be considered more of an intermediate term low. I don't know if it's the low, but boy, if the Fed is wanting inflation, you just look to these areas and you're going to get your inflation. So I'm going to talk. So in other words, yes, Ben, you could start. Remember we said start a little position here and you can add to it on any pullback. This is an area of consolidation. Might take a little bit of time, but that's what I'm looking at. And in this case, you want to make a very wide stop. Normally I don't do that, but here I will do that. I'll be right back. Dow's up 87, S&P's up 8. Be back in a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, so this is what we're doing right now, and this is not what we're doing. We're getting out of that. Was a little mistake. When I type, I hit all the different keys that I shouldn't hit. So I had it 10 minutes to 11. I get this email, and it says it's from L. I shorted this, capital letters. I shorted the SPY right at 206.78, right to the penny. Did I do the right thing? Well, let's put it this way. The SPY is at 205.95. And you shorted it at 78 cents. I'm really disappointed, Al, because you missed the exact top by 9 cents. Of course, that is just a fabulous trade. I've got this. This is going to be very interesting because I raised the stop on our short position of the Dow. We have just a position, and just this is the 1-to-1, and I raised it so that it was like a 1.7, I think it was, a loss that we would take, a reasonable loss under the circumstances. And this is going to be interesting for me because the low, we got stopped out by 1 penny. And now I think it turns out that we might have just made at least a short-term top. We'll see. That's the way things work sometimes. But that's just the way it is. And that was thanks to Janet Yellen. Thank you, Janet. But we'll deal with that. And the most important thing right now is that in the SPY pattern that we're looking at, the 120-minute chart, you see, this could be an alternate count, but I've got this as, excuse me, I've got this as peak A, B, oh man, C, D. Oh, L, you were just perfect. What a beautiful trade. A, I didn't get that on the Dow. That's interesting, but it's right there. A peak D in the 120-minute chart, and the stochastic's at 92%. So you have to see the stochastic go under 80% as the SPY starts to dip throughout the day and go underneath 205. I would have to put it at 205.30. So it's a long way to go. But anyway, on the short-term basis, you hit it exactly right. And let's see what happens. Now, let's do this. Right there. Couple of things that I'm going to be doing tonight in the webinar. And let me just do this again for you because it's the last opportunity to do it. Although it's a last opportunity, but it is archived. So if you want, you can still get it tomorrow or the next day. I think it's going to be a very important webinar for a couple of reasons. Let me just show you why. That's the webinar. You can sign up, go to the front page of TFNN and subscribe. You'll get my newsletter for a month. Even just getting the newsletter, you don't have to do any of the trades. It's very informative every single day. It gives you exactly what to look for in the VIX index, a whole bunch of things. My short-term trading index worked against like 100% accuracy rate these days, or maybe 98%. It's really fabulous. And it gave us the impression yesterday, intraday, that there would be a very sharp E-mini futures of 7 to 9 or even 9 to 11 points within 2 days. And it very often happens overnight. We got that. So there are a lot of things that you use in my newsletter. Now, most importantly, let me just show you something here. Ooh, I don't know if I'm going to go. I'll go here. Yeah, this is my opening call webinar for subscribers for tonight at 6 o'clock. Eastern time, the coming 3 months in the market, and where we are in relation to matching many aspects of the late 1920s. Not the point. The point is that is just part of it. What I am going to do is I'm going to go through all these different things. The monthly candles will just about be closed by the end of the day. Yes, you've got tomorrow, and tomorrow could be vicious, but a majority of the candle has been made already, and that's very important. Relationship of commodities to the market, stocks that are giving economic clues, sectors that are favorable and unfavorable. There were sectors that were not just unfavorable, they had that arch formation that goes all the way from a low to a major high, and it comes all the way back to the low. That was the commodities. And only in January, December, January, February, did you get these commodities start to move. And we saw that now. We've just seen that when Scott called and we looked at potash. So you got that in the agribusiness. Which sectors are unfavorable? There are some sectors now that are just not participating. And that's going to be very important. Then why am I wanting to buy certain ETFs more as a longer term? This is now looking out those 3 months. Why? What reasons would I have? And I'll give those reasons. What are the continuing late 1920s match? I have to tell you, let me show you something here. I wonder if I can find it. This is, for any of you who know the Boston area, Boston is really a very conservative, always has been a very, banned in Boston, that expression didn't come from nothing. It's a very conservative area. And right here is a new building. What is the building on top of? It's on top of the Back Bay MBTA station. And it is this huge complex. It's actually, I like buildings like that. I love the Prudential, not the Prudential, I hate the Prudential. I love the John Hancock building. I think you can just see a little bit of it over there. One of the most beautiful buildings, IMP. And this is planned. We've got 7, maybe it's now 9, major buildings, most of them skyscrapers, coming to the Boston area. And this was always just a very great big college town. Now it's turning into a city. And these things don't happen in a vacuum. They happen at a specific time and a specific reason and at a specific moment where it can only happen. It couldn't have happened in other periods. And the reason why it's happening has to do with a bunch of things. The reason why I think Boston occupancy rate is around 97%. I mean, 97%. And as long as I've been here, which is a long time, every time they say we need a new convention center and we need another 5,000 rooms for hotels, you are so close to a major top in the market, the real estate market. This is something we've got to monitor. And I'm going to be talking about, you just heard Larry interview. Oh my goodness, and I've forgotten his name. Fabulous interview. And then he spoke about Trump. Well, you know that a year ago, I spoke about Trump versus Clinton as that was what I was talking about. And I'm going to be going into this, not just in a political sense. I couldn't really care about that. This is to do with the stock market. It's to do with a number of things. And I'm talking about that tonight. And so this is going to be a really interesting webinar. And I'm going to give you potential trades. Hopefully we're going to pick up a couple of trades. I think we've already, did we or not? No, I don't think we did. I'm looking for a couple of trades that we hopefully will get today or tomorrow or in the next few days, because they are more the intermediate term ones. Yeah, okay, good. So let me move this away here and go back to what we're looking at. And this is what I'm going to be doing. And I'm going to be discussing the Elliott wave in terms of what we're looking at using other techniques, in this case, Elliott Wave. Elliott Wave 4 is still underway until we take out the all-time high in the Dow by 1 penny in my work anyway. So let's just do this. We're going to get out of that, and I want to show you a couple of things. The volatility index, VIX.X, has gone to a leg D in the daily chart. This is normally the area where two things can happen. One is, because it's broken under the 14s and it's in the 13s, there's a move down into the 12s that actually starts to hold, and it holds for a long time. Or it's a momentary move, and that move is very close to a reversal to the upside. So we'll talk about that when I get back. Dow's up 96, S&P's up 10.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yes, so here we go. Just a couple of things. I was looking at the VIX index, and I just wanted to say there are two aspects, and I don't think that it can be the first aspect, and that is that dollar. What am I looking at? VIX. VIX, and then we're going to go to Lou and Nashua. I'll be with you in a moment. Lou, just give me 1 second. Yeah, so this is a very important moment. The stochastic's flat at 15%, but it is rising as compared to the recent low of 13.75. This is kind of the area where I thought it was going to be the other day. But now that it's in a D, this is kind of the area where I would expect that you'd get some kind of a reversal. But that weekly chart is still it's testing the 1280. It's going to test the 1280 level. So that is still weak. So just real quickly, this is the area I wanted to say. There are just two things. One is that it starts to stick in this lower area and you just get major moves to the upside over and over and over. Or this is where you're going to get your V-shape. I've got a price time match, and that price time match goes to the 8th of April. All right, so just that would be an exact plumb line with the high of the 20th of January at 32.09. I'll talk more about it tomorrow. But in the meantime, back at the ranch, let's go to Lou. Lou, how are you?
Oh.
You're good.
Good. I'd like you to look at USLV.
So USLV, I've actually never looked at the USLV. This is 3 times along the silver?
Right.
Okay, so this is what I'm going to. I had a question about this just a little earlier. I had, I can't remember, email or text, I don't remember. But I was looking at the SLV. If you don't mind, I'm just going to look at, that's the route, the SLV, which is the iShares Silver Trust trading at 14.48. I think I did look at it just now. What I'm looking at is in this area, my only concern is the question was, should I be buying some here? And I said, you could nibble, but the real issue is how does it handle the 1440 low, 1438 low of yesterday? Because if it takes it out, it could go a little lower. I'm thinking that silver is going to play catch up at some point to gold, and then it could have a very big percentage move as it plays catch up, but timing it is going to be important. So in your case, I know that you don't, you like to just kind of get a position and then you'll use that position. If you were going to get 2 or 3 positions on the USLV, I would have said you could start right now knowing that this is probably not the best opportunity at 1449, but the best opportunity really is between 1445 to 1435 on the SLV. So let me give it to you on your exact position. Yes, 1229. So I would say you could start a little bit here, but if you're only going to get one position, I'd say have a little patience and see how the low of yesterday at 1204 holds. The area of 1220 to 13.80 is where I would probably start a position saying, yes, it could pull back a little more, but I'm looking at the weekly chart. The weekly chart suggests that if there is a break at any point above 1280, it's going to go really quickly into that gap towards the 1320 area. I hope that helps you.
Yes, very much, Basil. Thank you.
Thank you very much for calling. Let me do this again, folks. Just before you go to your swim lesson, I'm going to do this. Oops, that's not what I wanted to do. I wanted to do this right here. So tonight, my webinar, very important. For me, it's a very important webinar. For timing, it is absolutely imperative because the candle of March will be closing. And this candle says that how we close above the 9-period moving average, how we react and act within that first 7 or 8 trading days of April is going to be so important, because if there is a fade, if we go up to the top of the range and then come back down, where will the support levels? I've got a whole panoply of levels to look at, why I'm looking at it, etc. I'm going to talk about it. I'm going to give the trades that I'm looking at. I'm also going to give trades that are absolutely independent of what is going on now in the general market, because these are positions that I would like to have. So it's going to be a fascinating webinar tonight at 6 o'clock. Sign up, go to the front page of TFNN. You've got nothing to lose, 30 days free of my newsletter. See you on Thursday or tonight. Have a great day and wait for your swimming lesson.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.